I don't just want to do forecast for doing it for the doing sake. I want to do forecast that you will be able to benefit from. Okay, you see the setup playing maybe in the next 1 day or in the next 24 hours or 12 hours or next session. These are things I want to do, just not just to produce video. I want to produce content that will make sense to you. Okay, so I'm going to be starting off with I'll check the SY later with Euro AUD. Okay, there is opportunity for a long time sell for you on Euro AUD. Okay, you can see here on a daily time frame that you have a clear break of structure with a push to the downside that we have identified. And if you take a fib to the downside, you will see that at 50% retracement, you're having an inducement. It's an inducement. Every sell from this level was an inducement. You were being induced to sell, whereas you know the market is still coming up. Okay, right from when we were at this level, I forecasted 1.56. Okay, my target has been smashed. We have been following me for a long time. I forecasted 1.84 for GBP AUD, and I forecasted 1.5600 for Euro AUD. Both, I think it's only GBP AUD that had not smashed the target. Okay, because I knew what I was doing. And I said at that time that this vacuum created by the market must be filled. And when market was going down from here, people thought my forecast was wrong. And I made bold to say, no, it wasn't wrong. It was an inducement. And the market is still coming to the to the upside. But right now we're at the top, and I'm saying that market is coming to the downside and it's going to break this level, guys. Okay, it's going to break this level because you have a lot of liquidity right here, and it's going to take it. So now, after the market we are induced at 50% retracement, any level from 62 to 79. It's a possible level to be looking for downside. And you can see the market is right distributing at this particular level. Okay, if you go to lower time frame like 4 hours and analyze what is happening right here, you will discover something. Okay, if you look at this flag, I've taught you concept of fake flag. Okay, concept of fake flag. You will see that if you look at this market making a lower low right here, lower low, lower low, lower low, and here on the indicator, lower low, lower low, lower low, lower low. That means that the momentum to the upside has been lost, and right now you have a bigger momentum to the downside. That is number one. That is confirmed by what we have here. Number two, we have development of a weak or a strong high right here. You can see this trend line right here. Okay, you can see the way the market consolidated right here. After the consolidation, it broke to the high and immediately broke to the low and break structure. This means that we have developed a strong high here. We don't expect the market to break this level on this time frame. Okay, so that is done. Let's go to maybe 30 or let's say 15 minutes time frame. We'll see. This is how we analyze the market. Okay, this is how we analyze the market. Right now, if we take the fib of this last leg to the downside, it's a whole leg to the downside because this is where we break structure. We didn't break structure here. This is a single move to the downside to break this low. And then if we come to analyze again, you will see right here at 50% retracement, you see inducement level, inducement level. All right, so we want this market to get to between 62 to 79. All right, between 62 to 79. Okay, now remove this, remove this, um, remove this fib. Okay, now the market has gotten there, but I will now tell you something, guys. When this market got there, what was the session? Are we in the did we enter here at New York or at Asia or at London? Okay, some of the things I'm showing you here, these are the things that my students will enjoy, but nevertheless I'm going to show you. Okay, right here we enter the zone at London New York overlap. Okay, so if that's the case, we could look for opportunity, sell opportunity at this level. Okay, we can enter sell here at 1 minute time frame. There are things we look forward to. Okay, when you join my mentorship program, you will see the trick for you to get incredible 1 to 10, 1 to 15 risk to reward. All right, so right now, if you look at it very well, we enter Asia session, the London session, and the market is pulling up. All right, so what you are going to do right now, just close this, close this. What we are going to do right now for us to get an entry is simple. Okay, this move right here, of course, you have gotten a push down, you have a push up, you have a corrective structure right here. This corrective structure, guys, allow it to come up. Okay, it's going to come up, it may break or may not break this level, and after that you are going to have a strong move that will break this structure. Okay, after this strong move is formed, you can wait for corrective structure to the upside and take the sell. This is one scenario. Another scenario is this. Another scenario is this. Already you have the move down, so what you should just expect is for this to break to the upside. Okay, this move like this, let it break to the upside. As soon as it breaks to this level, okay, you turn up to lower time frame and look for a move to the downside, break of structure. Okay, boom, boom, the trade is ready. This is all confirmation made. The trade is ready. This is how you're going to be looking at it. Okay, at lower time frame, boom, to the downside. Compulsory target is this. This is a target liquidity right here, below here. It's a target liquidity. You can look for psychological level like 5200, and that would your TP. You can see this is a cool 1 to 10 risk to reward. Okay, so this is one setup you don't want to miss. Okay, another thing that can happen is if you wait and this market smash this level to the upside, that's not a problem. It may want to, you know, respect this level here, because remember, this is our protected liquidity, which is a very strong high. Okay, the market will reach that level and then begin to develop a structure, a bearish structure for a move to the downside. If you don't see this bearish structure for a move to the downside, you are not to enter the trade. So this is how you look at the market, guys. This is how you look for sell of Euro AUD. And I believe this sell, when it develop here, ultimately is coming to break this low. Okay, because this is overall target liquidity for Euro AUD, where you can see equal low. All right, equal low. It's just telling you that there was no particular big volume that emanated from this level. Rather, we still have liquidity under it on top, and market is returning to that level. Okay, so the same thing is also applicable to GBP AUD. They are brothers, sisters, same thing is applicable to it. Okay, my target is 84, right here, it's 84, right here. We're going to get there. We're going to get there because right now we're having, we're going to have a WXY structure. This is 3 wave down, 1, 2, 3, W, 3 wave up, 1, 2, 3, X. We're going to have 3 wave down, Y, before we have a move to the upside to target that level I told you. Okay, but right now you will see that after this move down and 3 wave structure to the upside, you have a move to the downside that break this structure. Okay, so if you take a fib of this leg, you will see that I told you when you are now seeing a reaction at 50%, this reaction is to confuse you. Okay, so confuse every support and resistance trader. You are seeing this as a support on resistance and you want to sell, whereas this an inducement. Okay, the market will sell down and then boom to the upside. This is an inducement to fake you out and rig out those who has low knowledge of how markets move. Okay, as far as I'm concerned, I'm waiting at this level or beyond. Waiting, let this guy get to that level. Let's erase this, delete this. Okay, as soon as we get to this level, guys, anywhere here or break this level, anywhere here, we are looking for our sell opportunity to the downside on GBP AUD. Okay, from this level, we are looking for a bearish development. Okay, when we see this bearish development at this level, we get in at let's say, let me draw it properly. You see, so that you know that it's not just one single entry schematic. This one will develop an inducement again. You can see 50% inducement. This one will come up again to this level. That's where your entry is. It's as simple as that, guys. Okay, here you have just a low stop loss, just very tight, and then you have a TP that comes to break this equal low, guys. Can you see this equal low, guys? Boom. That is target liquidity. The market will smash it. Okay, you can look for psychological level below like 73. Just give yourself conservative target 1 to 31 risk to reward, guys. Okay, these two trades is going to be, they are going to be very crazy, this week. I believe they will play out this week. Okay, so I'm not going to miss any of the two. If you are in my Signal channel, don't worry, these two are in my watch list. I'm going to watch them day and night and ensure that I give you the best out of these two trades. Okay, all right. Let's look at DXY. Okay, of course you can see DXY is pulling back. It's pulling back. This 3 wave structure is complete in DXY. I told you when we were here that DXY will come down. That's what you have seen. 3 wave structure is complete for a corrective structure, but this move to the downside is too strong. So because of that, you will see another correction here and breakdown before you see any upside. Okay, before you see any upside, I'm going to see corrective structure there and a breakdown. That's what I believe we should see. And if you look at it, let me teach you something right now. Okay, do you see this? Do you see this move here? A pullback. Do you see that before it pulled back, it did not break this structure? Can you see? It did not break the structure before you have this. So if you want to take a fib now, your fib is right between here, this level, and this level. This is what they will not teach you in your free Facebook learning. Many of you are learning free on Facebook. You will learn free on Facebook. It will take you longer time to master chart analysis because those guys in Facebook there will not teach you the real thing because it's free. They won't put down their time to teach you quality stuff because it's free. But when you pay for a content that is paid, you will get the raw stuff. Okay, so right now if you take a fib of this level, okay, there is going to be a confusion. Many of you will be confused right here. Market, uh, this market will correct to this level and will be coming down. And many of you will be selling. You think that DXY is coming down. It's a lie. This is what is called an inducement. This is an inducement to fake out support and resistance trader. We want to rig them out of the market. When they are selling, we are preparing for a buy. When the market gets here, we buy like this. Can you see support and resistance trader rigged out of the market? Trend line traders. Let me take this one off. Or let me mark my level. I want DXY to get here. Oh, yes. Okay. Let me take the fib. You see, maybe trend line trader like this, like this, like this. They are looking to sell now at this level. Oh, wonderful trend line. First touch, second touch, third touch. That's how they deceive you. There's nothing like first touch, second touch, third touch. This market is going up. Do you understand now? So don't listen to some of those guys. They all speak phonetic. You know, ability to speak phonetic doesn't translate to quality trait. All right. Some of us that speak village grammar, listen to what we tell you. We are telling you the real thing. Okay. All right. So allow DSY to come up. There will be inducement here. It will come down. It's a fake one. It's still going to go up. At this level, anywhere here, guys. Okay, watch out to come down again before the upside. That's for DXY. So based on what we have said in DXY, the opposite will be true for GBP USD. You see, GBP USD has really made an incredible move to the upside, and we are still in a downtrend. We are still in a downtrend, but there is no big move to the downside that suggests that the downside has started, because right now this is a wave. This is a wave of this time frame. This is a single wave, and if you take a fib of this single wave, guys, you will see that right here we are in our premium zone. Okay, we're in our selling zone. We are not to buy GBP USD at this zone, guys, because we are in the premium zone. Okay, so if that is the case, what's our expectation? All right, if you see from this level to this level, there are imbalances. Okay, you can see imbalance, and this imbalance has been filled. Okay, the market has got here, it has filled the imbalance. So if that is the case, what do we expect next? Okay, let's go to lower time frame like 4 hours and see what's happening here. Are we having a structure that that shows that we may be moving to the upside or downside? Yes, though we are at premium zone, but we are not having enough distribution. We are not having enough move to suggest that we should move to the downside. What do we want to see, guys? What do we want to see? We want to see a situation where either this one make a push to the downside. So if you make a move push to the downside, it means we have broken structure. All right, and then we'll now begins to look for our three-stage concept scenario for us to get a sell. Number one, you need to get a liquidity creation. All right, when you get a liquidity creation, number two, you must get your inducement. Number three, you must what? You must get to premium zone. When you get to premium zone, that's where you now look for opportunity to the what? To the downside. This is scenario one for GBP USD. Scenario two for this pair is a situation where this bullish structure right here, okay, make a push instead of breaking down right here. You made a push to the upside, okay, grab liquidity as supply and immediately flows down. All right, as soon as it flows down this way, it has broken market structure. Okay, and as soon as this market structure is broken and there is development of strong high, okay, development of strong high, now you can activate a three-step concept approach to getting your entry, which are number one, you must see liquidity creation, inducement, and market get your premium. Look for change of structure, you know, a transition from bullish trend to bearish trend on a lower time frame. Pick your trade and make a move to the downside. Okay, So that's how you read this structure. And I really want this one to play out. If this one play out, this is a guaranteed dollar as far as we are concerned. All right, as far as we are concerned. And my students, they can get the gist this way. You know, this is how we do it. All right. So if this pair, you can see it has made equal low right here. All right. And you see the way it makes it move, it develop a strong high right here. Okay, can you see that it's not breaking above the strong high? Even though it will break above it, we want this corrective structure, you know, to come a little down, but you can see it's consolidating along this zone. So what I want now is that if we don't have a strong push to the downside and strong push to the upside, we will not be looking for correction to make more upside. Okay, so the only condition that will make me to change my bias from downside to upside is if we have a strong push to the downside, which will show that this market has grabbed liquidity here and it has a strong push to the upside, then the corrective structure back to discount will be a trade. But this is a fake level, by the way. This is a fake level because even though we had a break of structure right here, we do not have a liquidity creation, okay, at the origin of the push. We don't have a liquidity creation like here. Right here, we have a liquidity creation. Can you see? This market broke below and moved to the upside immediately. This is a liquidity creation, and that is why this market returned to the same level right here and make a move to the upside. We do not have the same liquidity creation here that will warrant this market to come to this level and move to the upside. That means this is a fake level now. It was original level when this liquidity creation developed. Okay, it was original level. That's why this market make a move here. But right now, such liquidity creation did not happen. So this level is a fake here. We do not want to wait to see this market come here and make a move to the upside. I don't think it will work out. Okay, so our expectation right now is that we could have this move gradually coming like this, okay, and then move to the upside to break this equal top. Okay, from there we see the move to the downside again to break this low. All right, so the way I'm explaining it, you may not understand, but we don't have time, all right, on a call like this to begin to discuss theory. Okay, when we come to a normal classroom teaching, we can be discussing theory, but this is just to give you an idea of setup and what we see before we think those setup will play like that. Okay, USD card. Of course, you know DXY is correcting to the upside. That's why USD card 2 is correcting to the upside. Okay, so right now you see this break of structure. This market did not return to premium, right? So because of that, this move is considered as a single move. Okay, so based on that, guys, we need a return to premium, and proper return to premium must come at this zone. Okay, and you know, by the time you come to this zone, this liquidity, internal liquidity has been taken, which is a double top. Can you see? Boom, it has been taken. So I'm waiting patiently to see reaction of USD card right here. After the reaction, this reaction is called an inducement. It's inducing you to sell, whereas the gentleman is going to rig you to the upside to this level. When it gets to this level, that's when Nat want to get involved. Okay, I'm going to be activating my entry model, okay, at this point in time to take this trade from this level to the downside. Okay, take it with 10 pips. I've told my students, some of my students in the mentorship class, if our stop loss is more than 10 pips, then we don't know what we are doing. It means that we are wrong. Okay, 10 pips is how we do it. From 10 pips, you catch 1 to 12 leads to reward. It's as simple as that. So this is my expectation for USD card, guys. Then for gold, okay, that'll be the last pair I'm going to analyze for today. Gold, many of you will see this as a break of structure. Okay, many of you will see this as a break of structure. Then I laugh those that learn free on Facebook, this is what they teach them. This break of structure. They are looking for correction. And then upside. That's what you get on free education. All right. That is not a break of structure. Why? Look at it here. You have this move, you have correction. You have this move, you have correction. You have this move, you have correction. You have this this move here is a single move. Okay, it's a single move. You have a break of structure here. Okay, this pullback here never come to premium. It never broke the previous inducement. Okay, it never broke it. Can we take the fib? Yes, from this level to this level. Can you see? It never broke the previous pullback here. So because of that, you cannot call this lower low. No. This is not lower low. This is just an inducement. That is why I told you one of the theory for setup creation is when a market pull back from inducement level to discount level of the previous move. See previous move. When a market pull back from inducement level to what? To discount, you are qualified to look for buy opportunity to the upside to break that inducement. That is a theory. And we have executed it here perfectly. And I gave you this setup when it was here. I told you it was going to come to the upside. Look at it. Many people are saying, it's going to break a lower low, make lower low. I laugh. Okay. So right now, you now know why this is not a break of structure. You now know why you have to start looking for sell. And moreover, look at it here. The market is going to break this level to the downside because you have liquidity below here, liquidity below. So this has become our target liquidity. Has become our target liquidity. However, are we ready to make a move to the downside now? No. The market should give us, structure that inform us that we are ready to make a move to the downside. So as far as I'm concerned, I want this market to go back to the upside and redistribute. Okay, you can come up to the other upside, break this level, come here, induce, go up. Okay, come to this area, then you can look for a bearish formation where we can get our sell to the downside. Okay, but for us to get involved to the downside at this level, foul. Don't do it, because the market has made a move from upside here. You need to go back to the upside. You need to use like Asian session and maybe tomorrow London to go back to the upside. Then in New York, you can look for a transition from bullish to bearish market and will get involved with a move to the downside. Is that okay, guys? So these are the analysis I have for you for today. Just keep watch these pairs I've analyzed and see how they play out. Anyone that does not play out as I say it, it means I'm wrong. Okay, it means I'm wrong, and I don't have immunity against being wrong. I can be wrong in my forecast, okay, but most of the time I will be right. I will be right. Most of the time I will be right. Okay, so I don't know if there's any question, just one or two before we go. Do you have any question, one or two before we go? Is there any question? Is there anybody joining us for the first time? Any question?
Yes, sir. I have one question, sir.
Oh, yeah, ask your question. 1 minute.
Okay, when you look at EG,
okay,
Euro GBP,
okay,
you said that I thought that what is above that area that you said is not a liquidity, that there's no liquidity there. I thought that informs liquidity.
Which
the
one?
area that you condemn. Yes,
this area
line,
here.
This line below. No, below
This line
there.
here.
Yes.
Who told you? I
said,
didn't say there is no liquidity there. There is.
Okay,
Why?
maybe
Why
I
will
didn't
I?
get what you
No,
said.
I cannot call
I didn't get what you said.
Area that equal low. I cannot say this is what I mean. Look at it here. 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 Where is the liquidity here? What I mean, no, not liquidity. I wanted to say demand. Demand is what I wanted to say, not liquidity. Okay.
Okay.
My student will have known that I made mistake, that I wanted to say demand. Okay. Here,
Okay.
look at it. Look at it. You see this equal level taken to the upside, boom, break structure. This is a potent, a valid demand zone. That's why the market return to this level and make a move to the upside. Okay, but do you see similar thing happen as it happened like this? Do you see similar? So if similar thing wanted to happen like that here, we'll have had something like this: breakdown, sharp up, sharp down, sharp up. So when you have a sharp down, sharp up, it means that it was a liquidity grab right here, and that is a valid demand zone. If only this move to the upside break structure. If it does like this, does not break structure, is foul. Okay, so because we didn't have something like this, I'm not expecting this one to come here and be, even if you come here, I won't respect it. Even if you like, let it go, I won't respect it, because it didn't give me what I needed to see. This one gave me what I wanted to see, and this gentleman returned here, and I bought to the upside and made money. So what I saw here, I'm not seeing it here, so I'm not going to respect it here. It's as simple as that. Do you understand now?
I do, sir.
So that's it. That's it. Another question? Another question? Okay, so we'll call it a day. The weekly outlook I ought to have done for you guys. I'm doing it now because I know that if I do weekly outlook, even if you don't follow the markup, you're going to learn one or two things from what I discussed with you. Okay, because for those that do not have money to pay for mentorship, I try my best to show them one or two secrets that can help them in their own little way. Okay, you know, I try my best to just ensure that everybody cannot have money to pay $500, $1,000 for training. Okay, but for those that do not have the money to pay, they should not be at a disadvantage 100%. Okay, so while you are struggling in your own little way to make it, I'll chip in some little secret that can help you. But of course, the trading progress, okay, for somebody who is going through mentorship will be faster and sharper than those who are learning free from YouTube and Facebook. You know, I pray God will help all of us. Okay, so let's keep working hard, and hopefully this week I'm going to send one or two free trades to the free group. But of course, to in my Signal channel, any trade I take, I must send it there. Okay, I must send it there. So if you want to join the Signal channel, it's okay. It's free. It's not free. It's with a little fee. Okay, just contact at Feiti. Okay, at Feiti. Okay, contact at Feiti. Okay, she will give you the details. All right, and if you want to join my mentorship, I take not more than 2 or 3 in a month, because my mentorship program is one-on-one. I don't combine people, because I recognize over the time that people learn, people understand at different pace. Okay, so if I combine 2 or 3 people together, you discover that one is getting it faster and the other one is slowing us down. So for that reason, I treat my mentorship program on individual basis, one-on-one. Okay, and that is why I don't want to kill myself with work. Many people are requesting that I don't take more than 2 or 3 in a month. I know by the time I teach in 1 month, the work is lessened. I can take another student, you know, and reduce the spending time on the previous students. Okay, because by that time, it must have been strong enough, you know, to create a setup on its own. So that's how I operate, guys. So if you want to join the mentorship, it's simple. It's just $500. Okay, just $500. You register ahead of time, because I've already picked students for December. So if you want to register, the earlier you indicate interest, the better I will schedule you. Okay, if you are waiting till that time, you see some students will have booked before you, and I'm not going to take more than 3 in a month. All right, so that's it, guys. See you on Wednesday for Wednesday live session, and then we'll be able to review all these my forecast and see how they play out, either perfectly or slowly or a refusal to play out, which I don't think. All right, so see you next time. Bye.